Are you worried about how to deal with crypto taxes here in Canada? Well, a couple of months back, I posted a crypto tax for beginner video, which had garnered a lot of attention. And so I decided to create another follow-up video answering your most frequently asked questions. And if you guys are curious to see what those questions are and how I answer them, then keep on watching. Hi everyone, welcome back to my channel. For those who are new, I am Gabrielle and I'm a CPA in both Canada and in the US. And I also work as a tax manager at one of the big four accounting firms. And today I thought I would go over your most frequently asked questions and show you guys how I would walk through them. Keep in mind that this is not tax advice because tax advice to the individual can be very specific and I would need to understand a lot more of your circumstances and situations. This video is definitely not tax advice, but I hope to kind of guide you in the right direction and give you the resources that you need to look for the answers that you've been looking for. And so all the links I'll be using in this video will be all linked in the description box down below, and they're all mostly related to CRA guidances, so you know that they're coming from a pretty credible source. And without further ado, let's get started. So the first question that I have here that people often ask is, how does the CRA or the Canadian Revenue Agency know about your crypto holdings? Well, currently I have a feeling that the CRA doesn't, because there's not really of an integration between the crypto exchanges and the CRA's database. But keep in mind that Canada's tax system is based on self-assessment, and you are obligated to report your own income and do that in a truthful and accurate manner. And so the burden of proof lies on you if you ever get audited. So keep in mind that also not reporting your income is considered tax evasion. And in the case that you ever get audited down the road, then there might be a chance that, if you willingly don't report your earnings, that may be considered tax evasion, and that is illegal. And there is a lot of penalties and even imprisonment related to tax evasion. Also, I got an interesting comment here that some of the exchanges in the US, such as Coinbase, have already given record to the government, and so there might be an integration later down the road here in Canada as well. And so if that ever happens, you want to be in a position where you have been truthful in reporting all your income and that it won't be creating an issue later down the road. Okay, so moving along to the next question here. I personally haven't kept track of how much I bought and sold. I already have a headache just thinking about it. So a lot of people are concerned about how to keep track of all your purchases and your sales, because you may have multiple transactions that you haven't really kept track of, or you might be buying in multiple times throughout a month or throughout the year because you're dollar cost averaging, and you're just worried about, what would be my cost base when I report that capital gain or your income later down the road. And the thing is, with a lot of these crypto exchanges, they have a function where you're able to download all your transactions in a simple Excel format, and it's a matter of manipulating that data so you could get the information that you want. And so maybe look for that function in your crypto exchange to see if you're able to just simply export your information and give that to your tax specialist so they could kind of deal with that or calculate the taxes, or you could do it yourself if you know what you're doing. So hopefully that isn't much of a headache if you find that function, and best of luck. Another question that I get, this is quite long. So if I were to summarize it based on what I read here, is how do you calculate the cost base if you make these multiple purchases throughout the year? And I will be posting a link to the CRA guidance in terms of calculating your cost base. So if you see here, what I'm about to read from the CRA website is that you could calculate it based on your average cost. And so you don't need to calculate your cost based on like first in and out, because that will be a pain to keep track of. Instead, if you made your purchases, you could calculate the total and then you divide it by the number of units in order to calculate the average cost. And if I were just to read it off here directly from the website, it says the average cost per unit or share of your total investment increases or decreases when you purchase new units or shares, or reinvest your distributions, depending on the price when the transaction occurred. Every time you purchase additional units or shares or reinvest your distributions, you should recalculate the average cost per unit or share, and you do this for each of your mutual funds. Keep in mind this CRA publication is not specifically for crypto taxes, but we could apply the concept when it comes to calculating your crypto capital gains or losses. So you could use your average cost, and that will be a lot easier instead of calculating the capital gain or loss based on the individual actual purchase price. Other frequently asked questions sort of fall under the category of barter transactions, because a lot of these crypto transactions are not directly for, in exchange for fiat currency like the Canadian dollar. A question that was asked was, what if I'm getting paid in crypto as income? You report it as income when you receive it at fair market value. I get that. And it makes sense if I choose to sell it on the spot for fiat and tax purposes. But what if I choose to keep it as crypto and then sell it in the following year? I'm getting double taxed on my income just for disposing my income I got in crypto the following year. So the first part of this question is correct. So when you do receive crypto as income, it will be considered a disposition because you received cryptocurrency in exchange for goods or services, in case for services. And so that would be considered a disposition, and then you need to report that as income, and then you report it at the fair market value that you received it for. So that's correct. But the person's concern here is, what if you don't sell it for fiat currency and then you keep it until the following year? Well, how the Canadian tax system works is they try their best not to double tax you. In this case, if you report your income at the fair market value of the cryptocurrency, then that becomes your new cost base. And so in the following year, when you sell your cryptocurrency, that fair market value that you report your income in the following year becomes your new cost base, and then any increase in the following year would be your capital gain. So for example, say that you received $100 of Bitcoin in exchange for your services. And so that was the fair market value, and you reported that as income. Now, the following year, say that Bitcoin increased to $200 of the value. Then the $100, you already reported that as income. So that becomes your cost base. And then whatever the increase was from the $100 to $200, that would be the new capital gain calculation. It wouldn't be whatever the amount was before that. So I hope that answers your question. Keep in mind, this is just my personal opinion, and there may be a lot more layers to this circumstance that I'm not understanding, but that would be sort of the gist of it. Now, moving along, another kind of topic of questions I received were related to capital versus income. People were concerned whether what they're doing is on account of capital or on account of income, because on account of capital, you only get taxed 50% of the gain that you make, whereas income is 100% inclusion. And so here I see a question, hey, I have some holds and I trade some crypto every now and then. Would I be good to be under capital gains? I don't day trade. I do more like swing trades every now and then. And then another similar question was, if a person sells crypto in Canada and convert it to fiat just once a year, would it be safe to assume that it would be considered capital gains? On account of capital versus income here in Canada isn't strictly defined in the Income Tax Act. It's more about a case-by-case scenario, and you would need to look at the facts of the circumstances. There are a couple of indicators. So if you do it very frequently, you buy and sell frequently, and if an outsider looks at what you're doing and thinks it's more of a business than an investment that you hold long term, then most likely the facts would support that it's more of a business in nature, so you would need to report it as business income at the full 100%. But just looking at the limited information here, and you buy and sell once a year, and your intent at the time of purchase was more for investment purposes, then I would consider that capital gain versus income. So I received other questions related to whether you should even be taxed in Canada. And so a lot of these questions are centered around whether you're a resident of Canada for tax purposes. If I were to jump into the specifics of the questions, here I have is, what if you are a citizen of another country and a permanent resident in Canada, having only you lived and worked in Canada in the previous 2 tax seasons. If you used your other country bank account to deposit into an exchange trade and want to cash out to your Canadian bank, would you have to pay tax to both the Canadian and other country? And how would you show your initial investment in Canadian dollars? So that question has a lot of layers, but the gist of this question is whether she is subject to tax in Canada because she's a citizen of another country. So there is a lot of things to consider. First of all, you need to look at the tax treaty in place in relation to the other country in Canada. And if there's a treaty in place to relieve certain tax obligations, if you're considered a resident for tax purposes in one country. Even if you are a permanent resident in Canada, you need to separate the legal connotations of a resident in Canada versus the tax connotation. So you need to look at the 2 things separately. Legal residency and then tax residency. If you're considered a resident in Canada for tax purposes, then you'll be subject to tax in Canada. And there are a couple of factors that you need to consider. This is also case by case. There are a couple of things that the CRA looks at, such as your primary residential ties with Canada, which include, do you have a home in Canada? Or do you have a spouse in Canada? Do you have dependents in Canada? That would sort of support that you are a resident of Canada for tax purposes. And then also other secondary residential ties that they might look at are, whether you have a car, you have furniture, you have social ties, and you have like memberships to certain clubs, such as like a golf club. Do you have economic ties? So do you have like bank accounts in Canada? Do you have a driver's license? Do you have a Canadian passport? So all of these things you need to consider to see if you are a resident of Canada for tax purposes. Another thing is, if you don't want to be a resident in Canada for tax purposes, you could simply indicate that on your tax return and before you leave. So this is sort of like a tax planning aspect. If you're going to go to a lower tax jurisdiction and you will be leaving Canada and you don't think you'll be returning to Canada in the next like 2-3 years and you want to lower your tax, and you could declare non-residency for tax purposes, but that's tax planning, which we won't be getting into. But in this case, if you haven't done that, it's a matter of determining whether you're a resident of Canada for tax purposes. And so look through those residential ties to see if it applies to you. Also, if you are obligated to pay taxes in both countries, then what Canada allows you to do is to report foreign tax credits. So whatever tax credits you reported in the other country and you paid, you could report that on your Canadian tax return and you could get a credit for it. So you pay less taxes of the amount that you paid in the other countries. Also keep in mind that if you are a resident of Canada for tax purposes, you're obligated to report your worldwide income. So if you have income from other countries, then you would need to report that on your Canadian tax return, and you would report that by using the applicable foreign exchange rate. And it really depends on what sort of income you're reporting. Sometimes you would report the spot rate if you know the exact date of the transaction that happened, or you could use the average rate. So it really depends on what would be the most appropriate given the circumstances. A lot of people were asking about certain deductions that you can take. And so there's a distinction. If you're earning capital gain, then you cannot take deductions from the gain. You could take certain expenses or fees that were incurred, such as transaction fees, but you cannot take other deductions such as like home office or electricity, computer gear, like all of that stuff. But if you are doing crypto mining and it's considered a business activity, then it will be taxed as business income at 100%, but you're also allowed to deduct expenses that were incurred to earn that business income. A question here was, what if you are crypto mining and you make $15,000 a year? It would be a business income. However, you had to spend, let's say, $3,000 to purchase the equipment to start the crypto mining. Would that not be business expense that would go against your taxes? I would agree. So the equipment, the computer or whatever you purchased to mine the crypto, that you can take as a deduction, but you won't be able to take the full deduction in the current year. What happens is you could take depreciation. So it would fall under a certain class. Here in Canada, it might fall under class 46 or class 50, which I'll post a link here. And what that means is it determines rate of depreciation that you're allowed to take. So class 46 is 30%, class 50 is 55%, and it's on a declining balance method. So for example, if you spend $100 to buy some sort of equipment, like a computer equipment, and it falls under class 46 at 30%, the first year you could take $30 as a deduction. And so the balance would be $70. And then in the following year, you take the 30% of the $70 as a deduction against your income. So that's how it works. And so to answer your question, yes, you can take appropriate expenses that were incurred to earn your business income. Ooh, I still have quite a bit of questions, so hopefully I could just speed through them. So I have a lot of questions related to transferring one type of crypto into a different kind of crypto, so exchanging it. And if you guys remember that CRA website that I've referred to, what is a disposition? A disposition is a trade or exchange currency, including disposing of one cryptocurrency to get another cryptocurrency. So if you exchange your Bitcoin to Ethereum, that would be considered a disposition, and you would need to report the income or loss from the transaction. Some specific questions that I received was, I turned 10K into 20K in Ethereum, but then I put the 20K into an altcoin that went down 90%. So now that I only have 2K after I sold it, do I need to pay taxes? The capital gains tax for the 10 to 20K is more than the 2K that I have left. Tax bracket is 35%. So I guess the question here is, the person made money in the first disposition from 10 to 20K. And let's say this is on account of capital. So capital gain tax would be applicable on the 10K gain, and you would need to report that. But then in the same way, it goes down. If you have disposed of it at a 90% loss, then you would need to report the two transactions, both the gain and the loss. And if they're both capital in nature, then you could actually offset them. So if you earned 10K of capital gain, and then it went down and you have 18K in losses, the two would offset and you would actually be in a loss position. So you would have a capital loss balance that you could actually carry forward indefinitely and that you could offset against other income sources. So I will just look at the first part of that question and answer it like that. In that case, you don't really have a tax liability because you're able to offset your income or your gain with the losses that you also incurred. So another question here is, if I trade crypto and make a profit, I'm taxed on the profit. Yes. What happens if I take the profit and exchange it to a different crypto? So those are two different transactions. So you're taxed on the profit and you buy a different crypto with it. Then if you sell it for a profit again, you will also be taxed. But keep in mind, like I mentioned before, let's say you bought it, the first transaction, you bought it for $50, sold it for $100, then the capital gain is $50. And then you take that $100 and you invest it in a different crypto. And let's say that went up to $200. Your cost base is $100. It's not $50 because you were already taxed on the difference from the 50 to 100. So you take the 100 as the new cost base, and then whatever appreciation there was from the $100 would be the capital gain that you calculate. I just have a few more questions and hopefully I could just get through them really quickly. Holding versus disposition. So there are two distinctions. Whenever there's a disposition, which I've gone over what is considered a disposition, if there was a disposition, then you are required to report the income or loss. And that is because you've had an actual realized gain or loss. However, in the case of ad holding, where you're just merely having it sit in your account and you haven't really done anything with it, and you will see price fluctuations day to day because the fair market value varies from day to day, but that is unrealized gain or loss, and you're not required to report that until you have an actual disposition. So if you are just merely holding crypto and it's more of a long-term investment and you see the price fluctuations, there's no need to worry about it. You only report it when there is an actual disposition. And this is similar to this other question. Since I'm down 50%, that's no taxes, right? So that doesn't mean that you have a tax obligation yet because there hasn't been a disposition. You see that the value of your crypto dropped, but that's an unrealized loss and you're not obligated to report that yet. Last but not least, I just want to quickly go over the basics of how to calculate your tax, and that is because I got a question here when someone said, is 28.2% the consistent amount for business income? That was the percentage that I used simply as an example in my previous case, because the 28.2% applies as a marginal tax rate for those who earned 70K in income. But how the tax system works is that your whole 70K of income isn't taxed at the 28.2%. You're only taxed at that percentage between $50,197 up to $86,141. Any income that is before $50,197 is taxed at different rates. So you'll see any income that you earn between $43,000 to $50,197 is taxed at 22.7%. So within the income range, you're taxed at a different rate, and as your income increases, they get taxed in different brackets. But how you take the marginal tax rate is you're already earning $70,000. So any incremental income will be taxed at the marginal tax rate, the 28.2%, and that's going to be the applicable rate for you when you calculate your tax obligations. There's no point in calculating it at 20.06% because you already have that income. You're going to be taxed on that income anyways. So in order to calculate what your incremental tax liability is going to be, the most appropriate rate to use is your marginal tax rate. That was a very, very long video, and I hope I answered most of your questions related to crypto taxes. If you guys did enjoy this video, it would really mean a lot to me if you guys could hit the like button as well as the subscribe button and then the notification bell so that you can be updated on any future videos that I post. And if you guys enjoy these sort of videos, I'll also be linking a couple of videos here for you to check out. Thanks so much for your support, and I'll see you guys in my next video. Bye!